With the earnings volatility, we are seeing a fairly red market today, and in particular, we're seeing some of the semiconductors struggle. We have the likes of Qualcomm down 5%, Micron down more than 3%, but this also applies to others in the equipment and materials industry that is related to the semiconductor space. We're talking about Applied Materials down more than 5%, Lam Research, KLA Corporation, and we have to factor in investor sentiment is still sitting at greed, making today's episode a lot more pivotal because what we're seeing is valuations very high. We want to uncover companies that are being hit and see whether or not we are getting to some very juicy valuations. Are there undervaluation hiding in plain sight? Now also factor in interest rates were held yesterday, which is in part due to why we are seeing a bit of red in the market, but also some of these companies we are dissecting today have either reported or are about to. Now Qualcomm, they reported, will uncover how they performed very shortly, but they're down nearly 6% today. Over the last year, not great, down 10%. Year to date, also negative. Over the last 10 years, you probably wouldn't be far off the S&P's performance. They're up 138. As of today, though, they are trading in the midpoint of the 52-week range. We do want to flag that both CE Alpha and Wall Street consider this a buy, but it is below 4, and these are out of 5, so you could argue fairly weak. And nice to see their earnings where they reported after the market closed yesterday was a double beat, and whilst we do see growth on a year-on-year comparison, double digit for both EPS and revenue, we do see them down from the previous quarter, although factor in these semiconductors that we're reviewing today are in a cyclical industry, so this is something that should be expected. Now they've highlighted growth in the Meta smart glasses, but pretty much one of the bulk reasons why we get to see this company being punished after the double beat is that the handset chip division reported 6.33 billion. We noticed analysts wanted to see higher at 6.44. So it's not just about companies outperforming on the top line, it's also important for them to show proof that they can continue to increase even some of their largest streams. And when we get to their valuation, we see them at 12.9 on a forward P. That is below the 5-year average of 14.8. So whilst we don't look at these things in pure isolation, that is an undervaluation signal. Couple that with getting a yield of 2.35% above their 5-year of 2.1, another undervaluation signal. And we get a third one when we do look at the blue tunnel. Remember, the parameters within here signals the fair price. We're seeing this just outside of the bottom end. In fact, for quite a large period of time in the last 12 months, you could have bought this company in an undervalued space. And actually, if we zoom out to the last 5 years, you can see more often than not, Qualcomm is one that typically trades below its fair value. Now, before we get into the valuation, quick look to see what institutions are doing. They hold 74% ownership. They sold $13.5 billion in the last year, buying more than twice as much at $29 billion. Not only that, but in the most recent quarter, they bought $10 billion worth of shares, selling only $601 million. Clear, obvious institutions, net buyers and bullish on Qualcomm. And if we wanted to see the reversal of this trend, where in fact they sold more than they did buy, very minimal difference in Q3, you'd have to pretty much go to Q2 2022. So quite some time now, institutions bullish on Qualcomm. Now we're running through 6 stocks today, so we'll just get straight to the valuation where we have $202, average of the 4 models that you see on screen. But typically when we do our deeper dives, we do run through every single model discussing inputs and outputs. What we'll also highlight, as it has been requested, for the DCF model, if you solely want to look at that, not only is intrinsically 244, but baked into the numbers for this company is a decrease of around 1% year on year to their future free cash flow. Now, if you believe that is way too conservative, in fact, bit of a joke, then this is where you would see this in your view as undervalued. Using all 4 models though, $202, current price around $150. As always, kick off with 10%, execute on that if it meets the 3 golden criteria: wide moat, strong financial metrics, good forward-looking data. If you believe that today, a buy at $182, then we keep going till it's near the current trading price, and in essence, we're saying Qualcomm right now, 25% MOS, they just had a double beat. We also notice Wall Street themselves, whilst they see this over the next year at a lower price, 185, still translates to 23% upside. Perhaps an opportunity if you want this one, or in fact, you do hold at 30%, a buy at 142, at 35,131. As of today though, Qualcomm 25% MOS, 23% upside. Let us know, buy, hold or avoid. Now before we continue, just to let you know, we have released our latest free weekly article. We draw on every single Monday morning to your inbox, covering severely undervalued stocks as well as what's gone in the market over the last few days. So click below, you can sign up and read straight away, where you'll also be able to gain access to severely undervalued stocks for the month of July. Lots of information for each one, the upside that Wall Street themselves see over the next year, and make sure you are signed up. We are releasing August's copy tomorrow morning. And if that wasn't enough, you can also grab a copy of stocks that Wall Street themselves believe have the most upside in the S&P right now. So click below, you can sign up and read straight away. The next stock that is down in the semiconductor space is Lam Research. We're talking around 4%. They are up though over the last year 12%. Year to date, mammoth run up 32%. Over the last 10 years, phenomenal, up more than 1,200%. We're talking massive outperformance of the S&P whilst trading near their 52-week high. And what's also very interesting to point out, every single analyst believes this company is a buy. Fairly strong as well, 4 at a bare minimum out of 5. And they reported their earnings yesterday where we got a double beat. Not only that, double-digit growth, again, not only year on year, but actually from the previous quarter as well. Earnings per share up 30%, revenue up 10%. Love to see that. However, when we do take a look at the blue tunnel, we can in fact see here it is trading just above even the upper end. So this is an overvaluation signal. Fascinating that just a few months ago in Liberation Day, you could have picked this up in the $50, $60 region. That would have been severe undervaluation. So make sure you are subscribed, notification bell is on, because when we do see these opportunities, we will inform you. And if we zoom out to the last 5 years, this is one actually unlike Qualcomm, where it was in undervaluation for quite a long period of time. This one, more often than not, trades in severe overvaluation. And institutions with their 85% ownership selling only $3 billion in the last year. In comparison, they were buying $51 billion, extremely bullish. Also bought a lot more in Q2. Again, we can see very similar to Qualcomm, institutions, net buyers, very bullish at that. And if we want to go back, Q2, again, very minimal difference between buying and selling. Same with Q1. Actually, this one, you'd have to go back to Q3 23 to see the reversal. Now, Lam Research, our intrinsic value at $106, where in fact the DCF, not too dissimilar at 108, highlights that unlike Qualcomm, where we had negative growth baked into the numbers, we can see just over 8%. Now, using all 4 models, we get to $106, which as always, you can grab a copy by clicking on the pinned comment below, running through your own numbers, whether it's for LRCX or any others. But we see this right now, 10% MOS. Wall Street, with their upgrades after their strong earnings, see this at 110 into next year, upside of 16%. Now, if you like it but don't want to spend the $95 price as of today, 15% may not get there, but just highlighting a buy at $90 at $20.85 and at $25.79. As of today though, Lam Research 10%. Give us your thoughts. We then move on to Micron Technology, down around 5% today, where over the last year up 7%. Year to date up 30%, very strong run, similar to that of Lam Research. And over the last 10 years, not as good as LRCX, but still outperforming the S&P, trading in the mid to upper end of the 52-week range. Yes, we get a hold from Seeking Alpha, but not only do we see a buy from Wall Street, 4.47, very near to 4.5 to be a strong buy. Quant, in fact, 4.97 out of 5. they believe this is a must own. Now they did report their earnings, but we are talking now around a week ago where we got a double beat. Extremely impressive. Earnings per share up 208% year on year, revenue up 37%, and again we get a double-digit increase from just the previous quarter. And we also get an undervaluation signal with the forward P below 10 with the 5-year average at 12. And this is also confirmed when we take a look at this model. In fact, what's good to see in the shorter term, the blue tunnel has been increasing. Ideally though, we want to see consistency where the intrinsic value increases over time. Nonetheless, disparity between the bottom point and where it sits today, and the institutions with their 81% ownership selling 10 billion have bought nearly 50% more in the last year. They bought a little bit more in Q2, although you wouldn't have to go too far to see the reversal. Q3 2024. However, after that quarter, they did buy quite a significant amount more, so at least in the shorter term, we would say very bullish. Now, our intrinsic value at $124 derives solely from the DCF model. As you can see, we have a 20% growth rate. Low, medium, high numbers here are subjective, so if you grab a copy, you can put your own numbers, but already baked into the growth is just under 18%. So that is a lot higher than the previous two. Maybe you believe it is appropriate. We just saw very strong earnings, but we see here a 10% MOS up to 112, 15, not that far at the moment, but what will catch your eye is Wall Street themselves seeing this at 153 into next year, very close to a strong buy, 42% projected upside. Again, for consistency, at 20%, about 99, at 25, 93. So 15% margin of safety. Micron Tech, is this one you see as a buy? Maybe in fact just a hold, or potentially a complete avoid. We then move on to KLA. Whilst it is down around 3% today, they are due to report their earnings very soon. Up 18% in the last year. Year to date up 42%. Over the last 10 years, significant outperformance, up more than 1,600%, trading near 52-week high, just one buy rating from Wall Street, fairly weak, 3.78, and we also get what we would call a severe overvaluation, forward P 27 versus historical 21. You're also getting a yield of 0.9%, lower than historicals of 1.1, and that's also confirmed when we take a look here. This is ideally what we want to see, just as a pointer in terms of the blue tunnel increasing. What we don't want to see though is the share price go up even further, and here we note disparity. But over the last 5 years, you would have to go back to 2022 where this was trading in a severely undervalued level. In fact, there was only 1 or 2 points in that year where you could have got it undervalued. Otherwise, in the last 5 years, you would not have seen such a case. And institutions with their 87% ownership selling 10 billion, buying 14, they bought a little bit more in Q2, so not massively bearish or in fact bullish in this quarter, but when you do go back, more often than not, they do buy a lot more than selling, unless we hit Q2, the reversal in 2024. Now, our intrinsic value, $934. Again, pointing out the DCF is a lot lower, in fact, 819. Where we see already baked into the numbers is just over 13%. Now, on average, at 934, we will be looking at a margin of safety, just not at 10%. In fact, we're talking around the 5% level, one of the lowest today. Wall Street themselves also see this at 900 into the next year. We're talking low single-digit upside. At 10%, if you want to make a note, a buy at 840, at 20, 747, and at 25, $700. Today though, and they're reporting very soon, so perhaps if they do some stellar results, Wall Street will increase their price target, but as of today, 5% MOS, 2% upside. Let us know your view. We then move on to Applied Materials. Again, they are yet to report, down 5% today, 15 in the last year. Year to date, up 11%. Over the last 10 years, up nearly 1,000%, significantly outperforming the S&P, trading around the midpoint of the 52-week range. Fairly strong ratings in terms of the buys from both Seeking Alpha and Wall Street, and actually we get a fairly reasonable signal with the forward peak currently not too dissimilar from the 5-year average, yield 1%, slightly above the 0.9 on a historical basis, and again that reasonable signal does show its face when we see it around the mid to upper end of the blue tunnel. Liberation Day, it was severely undervalued, and over the last 5 years, like others we have pointed out today, extremely rare to see it in undervaluation. Again, make sure notification bell is on so you do become aware. And the institutions with their 81% ownership selling 14 billion, buying more at 18 billion, also bought a significant amount more in quarter two, incredibly bullish in the shorter and in fact longer term. If you want to see the reversal by quite some distance, Q2 2024. Now our intrinsic value at $221, not too dissimilar from the DCF model. Bear in mind, one of the lowest that is baked in today at 2.8% will still give us a very nice margin of safety, 10% by 198. At 20, not that far off, we're just talking a few dollars. So 20% MOS, 20% projected upside from Wall Street, they see this at 215. If you want a 25%, again for consistency, a buy at $165. Applied Materials, buy, hold, or avoid. We then move on to ASML, which continues to get battered by the market. Yes, 3% isn't a lot, but actually over a consistent period, this one has been in a downward trend, down 18% in the last year. Year to date, they're up, although only 1%. Over the last 10 years, long-term holders, very nice to see, 625%, but we notice all-time highs around the $1,100 mark. Since then, though, it has pretty much been decreasing, trading near 52-week lows, massive distance away now from the 52-week high of $945, but we do get a double buy from both Seeking Alpha and Wall Street. As a reminder, they did report a double beat where we got to see double-digit increases on a year-on-year basis, but around the mid-single digit from the previous quarter. And if you want to see a breakdown of their revenue, well, top line up 23% year-on-year. We got efficiencies to their gross, operating, and bottom line, which was up 4 percentage points. And the main reason why this one did suffer was due to the fact Mandarin said they were unable to say there will be growth in the shorter term, and that did really shake investors. Now, forward ratio 26.5, well below historical 33.5. You're also getting a yield above 1%, historically at 0.8, and the undervaluation also bears fruit when we look at this model disparity, but actually this one for quite some time has been in a severely undervalued level. Yet when we zoom out to the last 5 years, actually that isn't the case, although you can see 1 or 2 points in 2022. More often than not, it is either in an extremely overvalued situation or in a reasonable signal. Now, institutions with their 26% ownership buying and selling around 10.5 billion worth of shares, neither bullish nor bearish, although more buys in the most recent quarter. We do actually see in Q4 24 and Q3 a lot more selling than buying, so perhaps we are seeing sentiment start to change in the more recent quarters. Now, our intrinsic value at $909, firstly we'll point out, already baked in is 8.3% growth. We've gone 12% moving forward, but whether you use in fact 10%, there is also upside. First, let's talk about margin of safety at 12%. You're getting at least 10% up to 818, 20% at 727, and not quite there in terms of a 25% MOS. You would need to wait for 682. At 20 to 25 is where we see this based on the growth rate of 12% moving forwards. If we want to be more conservative and say let's look at 10%, where intrinsically it comes to 791, you can in fact see you are getting at least 10% up to 712, 15 not quite there yet, sitting somewhere 10 to 15. Interesting to hear what appropriate growth rate you think is applicable for ASML. Nonetheless, Wall Street see $900 into the next year, upside of 29%. Give us your thoughts on ASML, whether like others you see this as a buy, hold or avoid. And don't forget as always to sign up to the free weekly newsletter. We are dropping August's undervalued stocks tomorrow morning. And as always, have a great day. We'll see you all on the next one.